So with that, let me introduce the moderator to the next session, which is Engineer Abdul Rahman Burham, who is a close colleague of Omani here in Oman, and he will lead the next session, which is to do with Takaful and new markets, prospects, and challenges. So please join me in welcoming Engineer Abdul Rahman Burham.
Bismillah ar-Rahman ar-Rahim. Thanks, Mark. First, let me thank Dr. Dawood for this, informative, speech. Yeah. If you receive a message or a call, that will happen. It's okay. No. I'll handle it. Don't worry. Takaful is an industry, that has to start along with the Islamic banking. As long as you have an Islamic bank, you will have to have a parallel service, which is Takaful. Because Takaful is the insurance model of the Islamic, economy or Islamic insurance. So without Takaful, Islamic banks cannot work in the environment, or they will rely on conventional insurance, which is not in line with Sharia. So that's why Oman will also open, the market for Takaful companies to operate. Takaful industry is growing, and is growing rapidly. And today, Takaful industry is $17 billion industry around the world. We have two speakers on the issue. We have Mr. Gautam, who is the CEO of Madina Insurance, and Madina Insurance is hopefully going to be the first Takaful company in Oman. Gautam has 29 years experience in the insurance industry. He has worked with number of companies before joining Madina Gulf Insurance, as it was called, and he was with Solidarity also, which was a Takaful company in Bahrain. So he comes from a Takaful background, and he carries a very long experience in the industry. So join me in welcoming Mr. Gautam Datta. Also, we have Muhammad Owais Ansari. He is the chief actuary of FWU Group in UAE. Muhammad Owais Ansari is currently the chief actuary of FWU Group, and this group is a major independent financial service group which started Takaful operation in 2006 in the United Arab Emirates. FWU then extended its Takaful business to Saudi Arabia, Kuwait, Malaysia in 2008, and to Pakistan in 2009. FWU has been recognized as the global leader in Takaful, and also in Takaful on various platforms. Owais Ansari is a fellow of the Society of Actuary, FCA, and has significant experience in working for advising Takaful and conventional insurer. So join me in welcoming him on the panel. What we need to do here is actually we will give the respected panelists few moments to introduce, to answer an introductory question, which I will put it to Gautam first, in saying what are the opportunities in the Omani market, as you see, for the Takaful industry. So please go ahead.
Thank you. Good morning, everyone, and thank you for the introduction and also for the opportunity to address this gathering. The answer, in short, to your question would be the opportunity is great. But I guess all of you would like to know on what basis am I saying the opportunity is great. If you look at a few statistics, and some of these figures I've taken from the Ernst & Young's World Takaful report, where they talk about the global Takaful industry, and I think there is some disconnect in the figures because they talk about $12 billion by the end of 2012. So obviously the figure is far more conservative than what you mentioned. And what they say is that of this $12 billion, which they expect to be the Takaful premium by end of 2012, 70% of that premium comes from GCC. And now that premium obviously doesn't include the potential of the Oman market. The Omani market itself, in the last 4 years, between 2005 and 2010, has grown at a CAGR, compounded annual growth rate, of about 14%. And if we were to, now the statistics and studies are difficult to come by, especially when it comes to analyzing what is the Takaful opportunity in Oman. But comparing it with the way the industry has developed in the other parts of GCC, where Takaful was introduced back in the 80s, late 80s, and if we do analysis backwards, one can say that the potential of Takaful premium from the market, and I refer mostly to the non-life, because in Oman, the penetration, in spite of a 14% CAGR, is quite low. It's at 1.2% as compared to, for instance, in Malaysia, which is about 4.5. So if you basically translate those numbers and work backwards, then on a conservative basis, we are looking at a potential Takaful premium of something in the region of about 42 million riyal by 2015. Considering the current market premium of somewhere about 250 million riyal, this is a significant component. So that's how I would translate the potential Takaful opportunity in Oman. Now, having said that, there are obviously challenges which have to be overcome in order to get to this number. But I would say that Takaful opportunity in Oman is very positive, and it depends on how the operators take advantage of this opportunity.
Thank you very much for that. Now, I put this question to Mr. Muhammad. What are the opportunities in a new market for a new Takaful company from the life perspective?
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum and good morning, everyone. Firstly, I'd like to thank Amani and Dr. Dawood Bakar on behalf of the entire Takaful industry. Because normally Takaful is a late entrant whenever Islamic finance is talked about. So I think this is a very good initiative to have Takaful from day one when we start talking about Islamic finance in Oman. Now, taking this next step, I think the insurance or Takaful industry as a whole, how is it measured? There are two basic measures that are used globally to compare countries and economies. You have the insurance penetration and you have the insurance density that's used. The insurance penetration is basically the overall insurance or Takaful spent divided by the GDP, and the insurance density is insurance of Takaful's premium divided by the population. So if you compare what's happening in the advanced markets or the mature markets to the emerging market, which is mostly the Muslim world, the advanced markets have a penetration rate of around average 8.6%. Compared to that, the emerging markets stand at 1.5%. Similarly, the density, the insurance density for the emerging or the advanced market is 3,700 USD, while the emerging market, which are mostly in the Muslim world and the Central Asian world, we stand at a USD 124. There's a big gap that is there. Now, there are two lessons to be learned from that. Firstly, there is potential on the penetration side. Secondly, there's a lot of population, a young population, that we have to cover. The potential is there. There's magnificent potential in the Muslim world, and this potential has been there for a while. So what is it that has changed now? Why are people talking about Takaful so much? So the reason previously we have had this potential but was never tapped was because there were not the products available in these Muslim world to cater to the needs. Takaful is a bottom-up product. There's a demand from the people. And if you don't provide the product, the demand would never be met. So that's where the demand is coming from, and that's where the growth has seen. Over the last few years, as Takaful has stabilized, the growth has been averaged 29% over the last 4 or 5 years. Now, that was the first thing, I think, on how Takaful has been growing. Secondly, we have to look at also the dormant markets. Dormant markets where Muslims are there in the developed world. In Europe itself, you have France and Germany combined, you've got more than 8 million people. And if you look at the potential with these people, they are people who are only buying insurance where it is compulsory. They're not going for the Takaful option because they don't have it. So I think that is the market that we need to also look into. Now, for a new insurance industry company that comes in, I think the key element is, especially if you're talking from an Omani perspective, is to create awareness and understanding of Takaful. Because if you don't have the awareness of Takaful, you can have the best product on the shelf, but you would never be able to sell the product because people do not know about that product. Secondly, on a new field, what happens is, I think if we were an Apple or Samsung producing products that everybody can see and hold in their hand, then it's easy to produce a product and sell a product. In insurance or Takaful, you're selling a promise. The person who's buying or entering into a Takaful contract is basically buying a promise from you to sell, to protect him in case of any need that arises. So in that case, you need to build up a brand name. That takes time. You have to have the best customer service. You need to have the right elements of covering the people and paying claims at the right time. So from a new market perspective, these are the two key things. Then I think you have to also think of from establishing effective distribution channels. And one of the key things is the efficiency, operational efficiency that has to be there as you go along in a new market.
Thank you very much. Actually, you have covered, not only the opportunities, you went, ahead of us to the challenges, and I hope that also everybody, all the audience understand the difference between the two, models of insurance, the Takaful model and the normal conventional model. I hope that is clear, and I leave that for you to ask if that concept is not very much clear in your minds, because we talk here about two different models here. The Takaful is basically, as he rightly mentioned, it's a promise and a tabarru' contract. So it is, you're giving self, the opportunity to make use of other funds available in the fund of Takaful in case of any, risk that happens to you, which is identified. So I leave that for the floor, but I go to Gautam now and say, this is basically the awareness, the branding, and the wrong consumption, perception in the minds of the people about the insurance. So how do you plan to tackle those challenges that you will face on the short term?
Well, it sounds pretty straightforward when you put it down that build awareness. But even if we were to look at the course that the conventional insurance, the traditional form of insurance has charted, it has taken centuries for the conventional insurance to establish its practice, to establish its understanding. And even now, people still debate about certain aspects of the insurance practice. So for Takaful, which is still a very, very new industry, for it to establish its awareness, it is going to be a very, very challenging task. One of the important things about Takaful, when we talk about the differences between Takaful and conventional, and I know that you've left it open to the floor, but I think it's important for me to bring this out, which is as a background to my answer, is as opposed to normal conventional insurance, where it's a contract between the insured and the insurer that in the event of any misfortune as described in the contract will be paid in return for a certain premium that is calculated at the inception of the contract. Takaful comes from the spirit of building solidarity. That's what the word means. And this is where the basic difference lies, where policyholders get together in order to mitigate each other's losses. So it's very different fundamentally, it's very different from the concept of buying a product as opposed to getting together to form a pool and share the risks. And this concept, to explain it, to make people understand the responsibilities that a person assumes when they join a policyholders fund is critical for the actual spirit of Takaful to be truly understood. But having said that, in normal practice, the way we look at it as Al-Madina embarking on this path of Takaful, where we intend to convert our whole existing book into a Takaful book, it would be to start with the basic awareness item, is that what is the difference between a Takaful and a conventional contract? What are the fundamental differences, in the sense, what are the ethical differences between Takaful and policy and a conventional contract? And how does a policyholder benefit from the Takaful relationship? And the rest, in a way, follows from that. The challenge over here is that there is a general perception that, and I think it was mentioned earlier on by Dr. Daud in his address, that it is just another form of insurance wrapped in a different paper. But it is really not. It is truly a concept where there is the element of solidarity, there is the element of sharing, there is the element of understanding the responsibilities of sharing the pain. And the shareholder, who also doubles up as the operator or as the wakil, as agent for the policyholder, carries the responsibility of the policyholder's fund as a trustee. So the policyholder's contribution that comes in is a fund that is held in trust by the shareholders as taking on the role of an operator. And it is the policyholder that actually owns the outcome or the fate of that fund, in terms of how they behave, in terms of how they look at their participation on an ongoing basis. These are the important elements of awareness that needs to be brought out for the Takaful to build a profile which actually represents its true intent.
Thank you very much for that. Let me go to Brother Muhammad, and for the Takaful part of it, what are the expected challenges for the Takaful industry?
I think from a re-Takaful angle, first of all, I think it's important that for the growth of the Takaful industry overall, it's important that there is a re-Takaful industry that is there to support the concept. Because initially when Takaful was launched and there was not the re-Takaful capacity available, the Sharia scholars had allowed under the, I think the concept of Zarura to go to the conventional reinsurance operations. But now, over the years, there are a lot of re-Takaful companies that have come into the field. And there are all the big names, the Swiss Re's, the Munich Re's, and Hanover Re's, who have stepped in as re-Takaful providers. From a re-Takaful angle, I think there is currently a shortage of capacity on the non-life or the general Takaful side of business. And there is, I think, excess capacity on the life side of or family Takaful business. Now, having said that, there is an interesting factor or interesting statistics to note, which is that the reinsurance ratios for the Takaful industry are lower than the conventional insurance industry. So I think there's a gap of around 5 to 10% between Takaful reinsurance ratios and conventional reinsurance ratios. And the reason for that, what it goes on to prove is the fact that the Takaful industry at the moment is not being going into the more complex businesses or the complex lines of insurance, and they have been focusing on the basic lines of insurance. That's why they have been retaining most of the risk. I think as we go along and the re-Takaful industry has to widen, to accept and to develop products to cater to the more complex insurance lines of business. So I think, having said that, I think the growth in the re-Takaful industry would basically come from the organic growth of the existing Takaful operators, the new Takaful operators that are coming into the field. The consolidation of the Takaful industry would eventually lead to higher retention ratios, because most of the Takaful industry, Takaful operators would come together and form bigger industries, companies as we go along. And I think one of the key elements for the Takaful operator is that they have to expand their role from a pure risk carrier to a consultant and a business advisory solution provider for the basic Takaful operators. So I think that's where the re-Takaful industry, I think, has to move to in the future years.
Thank you very much. I have more questions, but I'll start with the audience for their to take up their questions. Let's start from anyone. We have a question here, please.
Assalamu alaikum. My name is Hussein Jama, General Manager of the Retail Business in Oman Oil Marketing. Thank you for the enlightening information on the Takaful. I thought, just for my better understanding, if you could please give an example. Say for a normal person, if you want to insure his vehicle through Takaful, how that would work out?
You want me to take that?
I think Gautam can take that. You know.
Yes. Well, the typical transaction would not be very different from the transaction that you undertake today. There will be a proposal form. The proposal form will list out the details of the policyholder, the details of the property to be insured. In this case, it's a motor vehicle. The motor vehicle, the details of the motor vehicle. In certain cases, the details of the driver, etc. So, as far as declaration is concerned, it would be no different. When it comes to measuring what will be the contribution, that again is related to the risk. At the end of it, we must understand that in Takaful, what are we actually doing? We are providing a financial security whether it's by way of a mutual support or in the case of conventional through a capital support. We are providing a support in terms of, at the time, if there's a claim, the insured or the policyholder is put back in the same position as he was before the occurrence of the claim. And the risk that policyholder faces is no different from a conventional risk. So as far as computation of the contribution is concerned, it would follow more or less the same actuarial path. However, once the contribution is collected and it forms part of policyholder's pool, that's where the actual differences start taking place. Because if I were to take you as an example, you as the contributor to this policyholder's pool, you have a stake in that pool to the extent that you have contributed. And at the end of the year, when the pool's performance is assessed, the surplus that is generated out of that pool goes back to you, or it becomes your share in the same proportion that you had contributed to the pool. So, and any other activity that takes place out of this fund, such as investments, etc., they also have to comply with certain Sharia factors. So all of that put together, which forms the surplus, you have a share in that, again, in the proportion that you've contributed. So in terms of mechanics, things don't change. But in terms of ultimate result, that's where the difference comes in, where you start getting a share in the pool that you create.
I think, the basic difference here is, I want to add here that don't think that, the policy fund will make surplus, because not many insurance companies actually make money out of the policy, holders fund. They always most of the times they are in losses. So that will put a challenge to the Takaful company. How real is it? How different is it from the conventional? But I'll take this to Muhammad to answer in another way. Since this is the Takaful is something that has, it's a solidarity. Takaful is solidarity, actually. People come together to protect each other. And there is a professional operator who invests the fund and assess the risk and help them to reduce the risk. So this is basically the concept here. But it's the fact that the policyholder is a partner in the fund, and he is going to benefit from the fund if it doesn't pay a lot of claims, and he will lose his contribution if they pay a lot of claims. Does that fact should mean less claims, more awareness from the policyholder? Are we experiencing it in other companies, Takaful companies?
I think first I want to add one point to the question that we got. One of the key elements of Takaful is transparency. You have to be very, very clear about the terms and conditions that you're entering with the policyholder. Compared to a conventional insurance contract, a Takaful insurance or Takaful contract has much more transparency. So you have to be very clear on what you're charging to the customer, what he will eventually get from the contract. So I think that is one key element, which is the disclosure bit, which is, I think, to be honest, if you look at the developed world where they are moving into the Solvency II directive that's coming up, it also talks about the same thing. The disclosure has to be there for the customer to understand. There have been quite a few cases in the UK recently about not even proper disclosure. There have been fines by the FSA on that. So I think Takaful inherently has this element that you have to disclose. Your terms and conditions that you sign up with the policyholder, they have to be completely reviewed by the Sharia board. And they make sure that all the elements of transparency are incorporated into the contract. So that is one element which is very important from a customer perspective that you will have, which normally you don't see that in a conventional business generally. And then coming back to your question of the claim experience, I think Generally, first of all, I think there's several Takaful models that are in operation in the global Takaful world. You have the Mudarba, the Wakala Waqf model, and the Wakala hybrid model. But in whatever model you're using, generally the number of claims are independent of model that you have, even if it's an conventional insurance company or a Takaful company. The number of claims is independent of the model that you're using. The important thing, which has to be taken care of, is the risk selection process. I think that is the key. As a wakil or the Takaful operator, you are responsible, or an insurance company or the wakil is responsible to take care of which risk he's selecting within the pool. And any selected risk is not basically eating up into the profit of the rest of the people. So basically, the key element is the risk selection, and combined with that, whether that risk is coming at the right price. Because you don't want, just because the competition is giving a better rate to that customer, you don't want to rate cut and go below and go into a price war. So you bring a customer at a lower price compared to the similar customer which has been already there. So I think the risk and the selection process, the price that you pay for that, I think that is the key. And lastly, I think because of the Takaful nature, the surplus that exists at the end of the year, normally that goes back 100% to the customers. And in the life Takaful or family Takaful business, since the experience has been there for hundreds of years and it's not cyclical, you have a stable surplus. On the non-life business, as you correctly mentioned, there's a lot of ups and downs, there's a lot of cyclical movements which have sometimes resulted in losses in the Takaful fund.
I just would like to extend that a bit because...
very shortly, because...
Very short. Is because the Takaful operators, and as I mentioned, the Takaful is still a very new industry. There is always the challenge of achieving the critical mass before the expenses break even. And one of the reasons for Takaful Policyholders Fund being in the negative is this lead time that it takes to reach that critical mass. Apart from that, underwriting is a key issue. What is important in the Takaful segment, however, is what was mentioned earlier in terms of how the segmentation takes place. And initially what we observe is that Takaful funds typically cater for retail risks where a large volume can be retained, which can then help generate the critical mass. And that's critical in terms of how the segmentation strategy is adopted by the operator.
In conclusion to this session, I wish I have more time to give more, questions to the audience. But definitely, the issue needs a lot of discussion. As we see that the opportunities are big, the penetration rates are very low, and there is a big opportunity in the market for the Takaful, not only in Oman, but also regionally and worldwide. And it is mixing the professional risk management experience that is gained over the years from the conventional insurance and converting it with the values and ethics of the Sharia solidarity or Takaful, where there is a potential of 1.6 billion people on earth that can benefit from that in one way or another. So it's going to be a huge industry in the future. Thank you, Mr. Gautam and Brother Muhammad, for your good contribution here. Thank you very much.